Very good morning to all of you. I am Dr. P. Benjamin Rosario, Assistant Professor, Department of Commerce, St.Joseph's College of Arts and Science, Autonomous, Cuddalore. Here I would like to explain about the concepts regarding consignment from the Financial Accounting 1. So consignment means a manufacturer or a wholesaler who is sending the goods to his agent or to the other person for the purpose of sale on behalf of the manufacturer or wholesaler. The person, one who is sending the goods, is called a consignor or principal. The person to whom the goods are sent, or the person, one who is receiving the goods, or the person, one who is selling the goods on behalf of the manufacturer or wholesaler, is called a consignee. The transaction which is taking place is called a consignment account. So there are few transactions taking place for which we need to write the journal entries, and based upon the journal entries we are going to post the journal entries into the ledger and we are going to prepare. So we are going to see the journal entries in the books of consignor in the consignment account. The following are the some of the transaction which is taking place between the consignor and the consignee in consignment account. First one is goods sent on consignment. So this is the first transaction which is taking place between the consignor and the consignee on consignment, which is the consignor is sending the goods to the consignee for the purpose of sale. And then second transaction is expenses incurred or paid by the consignor. This is when the consignor is sending the goods to the consignee, he will be incurring or he will be paying certain expenses like transportation and insurance, all these things. So this is the expenses paid by the consignor at the time of consigning the goods or at the time of sending the goods. So these expenses are considered as a non-recurring expenses, which means these expenses will be incurred only once, that is at the time of sending the goods by the consignor to the consignee for the purpose of sales. And then third transaction is expenses paid by the consignee. So this is at the time of receiving the goods by the consignee from the consignor, he will be incurring certain charges. Namely, it can be import duty, dog charges, or it can be unloading charges, or even he may be paying the freight charges also. These expenses may have the nature of recurring expenses or non-recurring expenses. And then fourth one is advance payment paid by the consignee. So normally when the consignee is receiving the goods, he will be selling the goods and he will be getting the commission from the consignor as agreed upon at the time of consignment agreement with the consignor. So here when the consignee is receiving the goods, he may make a part of payment or 10% of amount to the consignor as advance amount. And then the next transaction is sale of goods. So here the consignee is selling the goods on behalf of the consignor as per the instructions received from the consignor. So he will be selling the goods and he will be getting the money in his bank account. And the next transaction is commission paid to consignee. So this is the amount paid to the consignee for selling the goods on behalf of the consignor. So here as agreed upon, there will be a particular percentage of amount will be paid on sales to the consignee as commission. And the next transaction is profit on consignment. So as there are certain transactions taking place in the consignment, this is the result on the consignment account. So namely, this is the profit earned by the earned during the consignment account. Then final payment made by the consignee. So after adjusting all the expenses incurred by the consignee and the commission is liable to get by the consignee and advance payment made to the consignor, these amounts will be deducted from the sales amount and the remaining amount will be paid to the consignor as final payment. And then finally closing stock on consignment. If there is any stock which is remaining in the consignment which is unsold, which will be shown in the consignment account. So these are some of the transactions or activities will be taking place in the consignment account. So now we are going to see about what are the journal entries which we are going to record in the consignment account. First one is entry for sending the goods. So we have already discussed in detail about the transaction taking place in the consignment, and now we are going to see the journal entries for the transaction. So first one is entry for sending goods. This is consignment account data to goods sent on consignment accounts. So this is the journal which we are going to use in order to post it in the ledger. And then entry for expenses paid by the consignor. So for which the journal entry is consignment account data to cash or bank account. So which means the expenses needs to be debited in the consignment account, and we are going to credit the person who is paying. So as the amount is being paid from the bank account, we are crediting the bank account. And then third transaction is entry for expenses paid by the consignee. So for which the journal entry is consignment account data to consignee account. Then fourth entry is entry for advance given by the consignee to the consignor. So for which as the amount is received from the consignor bank account, we are debiting the bank account. As it is being paid by the consignee, we are crediting the consignee account. So bank account data to consignee account. And then fifth transaction is entry for sales. As the sales amount is received by the consignee, we are debiting the consignee account. As it is being sold from the consignment account, we are crediting the consignment account. So the entry is consignee account data to consignment account. And then entry for commission paid to the consignee. Consignment, as it is expenses on consignment, we are debiting the consignment account, and as it is being paid to the consignee, we are crediting the consignee account. So the journal entry is consignment account data to consignee account. And then entry for profit and consignment account data to profit and loss account. Then entry for final payment, as I have explained earlier, this is the amount paid by the consignee to the consignor at the end, which is the final amount. So as it is being paid to the consignor bank account, we are debiting the bank account. As it is being paid by the consignee, we are crediting the consignee account. So the journal entry is bank account data to consignee account. Then last entry is entry for closing stock. The journal entry is stock on consignment account data to consignment account. I hope that these explanations would have enabled you to understand the basic concepts on the consignment. Thank you.